Increasing precious metals added to 6 central bank reserves in 2020. Purchases added up to over 16 tons of gold and silver. This was consistent with gold and silver purchases in August and September of 2020. This was reported by the World Gold Council. Multiple countries have continued to load up on gold and silver. The Uzbek Central Bank added over 8 tons to its reserves of gold, matching its purchases in October and September. The Uzbek Bank has been extremely active recently. It has sold up to 32 tons of gold in August when the country elevated its gold exports to generate income to cope with the new pandemic the world was experiencing. Qatar and India were the other 2 big buyers in November with 5.9 tons of gold. In August there were reports that the board of the Reserve Bank of India was raising its gold reserves. It was a large buyer in November. Turkey reported a 20.9-ton drop in its gold reserves. The drop in Turkey's gold holdings was a function of higher local demand. That led to increased trading between domestic commercial banks. In 2018 Russia passed China to become the world's 5th largest gold-holding country. Russia has more gold than US dollars thanks to surging gold prices. The Chinese government has hinted that it may drop more US treasuries from its reserve holdings. The economic chaos caused by the worldwide pandemic has also impacted the market. Central bank demand for gold and silver came in at 650.3 tons last year. That was the second highest level of annual purchases for 50 years. Just slightly below the 2018 net purchases of 652.2 tons. Our central bank survey conducted last year showed that precious metals' role as a risk mitigation asset is highly valued. The current economic analysis, inflation is largely in the eye of the beholder. Depending on how you chose to look, very different stories emerge. Inflation is a global wave that will ultimately swamp all shores. As the world's economic leaders gather in Davos, Switzerland, much of the discussion has been focused on a report jointly issued by the Global Economic Forum and McKinsey & Company, which forecasts a 100 trillion increase in global debt in the coming decade. The growing level of federal debt would also increase the probability of a sudden fiscal crisis, in which investors would lose confidence in the government's ability to manage its budget, and the government would thereby lose its ability to borrow at affordable rates. The fact that our elected leaders fail to understand basic economics, or simply bury their heads in the sand, underscores why inflation will be a major factor in the years ahead. For me, there is no escaping the conclusion that inflation will continue to surge. Inflation is, after all, the increase in money supply. There appears to be no escaping the likelihood of a massive floods of new money rolling off presses around the world, especially Washington, D.C. Just like Enron shares become worthless overnight, if the U.S. is deemed to be insolvent because it cannot pay back its debt, the currency could plummet in a noticeably short period of time, even if the pending supply of dollars has yet to be printed. When you understand these basic issues, the decision to include precious metals in an investment portfolio becomes a foregone conclusion. Stack precious metals as an alternative method to stabilizing your finances and diversifying your portfolio. This has been brought to you by Silver Stacks Prepper.